Good morning, everybody. This is Grant, and this is pre-market analysis. Okay, what do we got going on here today? This is let's look at the news. The market is falling off fast here this morning. We got Wednesday, wacky Wednesdays. These are tend to be a little less predictable, but they still give us some decent signals throughout the day. Okay, up today we've got at, what is that? That's going to be at 1:30. At 1:30 Eastern, we've got some news event today. Crude oil inventories going to be discussed, be reported on. And overnight, the market dropped quite a bit here. We've got the settlement here. You can see my screen. I'm showing the 1 minute chart at the moment. What did we close at yesterday? We closed around into the session. Here we go. Then the session was about 23.98. We are down a solid 9 points, 9 handles at the moment with that. Okay, what have I got on my screen? So I've got the 1 minute with the VWAPs on here. This bottom part right here where my mouse is, this is a indicator that I've developed. It helps me to recognize the energy in the market. It only is working during regular trading hours, so at this particular point in time it's not operating. We have about 20 minutes before the market opens. Yeah, big drop. So a little bit of news today. All right, the main thing that I do here at the trading is I look for the relationship between the market engine and the market speed. The market speed is the rate of change on price, which lots of speed going on right now. And then the engine is the set of metrics such as the volume, the rate of stocks that are on the uptick or downtick, the decliners and advancers, and the comparison of that to the rate of change, meaning the price change. When we watch for those and we can see the difference between them, it gives us, and we look for good locations, so you have to have that. So understand how effective is the engine to price, and then where that price is relative to market structure. That's it. The combination of those then creates the opportunity for trades. Okay, let's look here. We've got set up a couple of things. This is going live, YouTube live. Show up on my page here. Okay, market just broke out of a channel. So one of the other charts that I use is to help me to see market structure. Is I'm a fan of trading based on time. In addition to that, though, I also like to understand the structure of the market independent of time. And so this is a range chart with Heiken Ashi. And it basically says, what's the range of movement? These are 4 tick bars, so what's the range of movement? And let me see just market structure itself. So time is a secondary citizen or second class citizen. So you can see down here across the bottom that time is not consistent, right? Market will sit static for a while, then we'll move a lot and sit static. This shows just pure price movement, pure price action. So when I understand market structure and then I associate that with the effectiveness of the market engine on price at a given time, that right there I have found opens the door for finding the high probability opportunities. Okay, so we just had a pre-market drop, hit a low here. The E-minis, I trade the E-minis, just the E-minis. So this channel is dedicated, and what I do is dedicated to trading the E-minis. Big move overnight. Now, many times this kind of day could end up being somewhat choppy, but boy, it sure started with a big move. So we'll see what will happen. But it came down on the daily chart and it touched a key just right there. It touched a key line. So this support line that it just landed on. Here, let me show that to you. So the support line here. Let's zoom in on this. Sorry, this will be a busy chart. My apologies. Okay, got a bunch, but up here you can see right here overnight came down and hit this support line right here in the pre-market. See if it breaks back past that. Lots of times, you know, the average range for the ES is around 9 handles. That's the average. You can see it was an inside day yesterday. It's already a trending day here this morning. We'll see if it stays within that range or looks to break down below that. Okay, so overnight, big drop as I already said. I tend to use 3 different charts. I'll use the 1-minute chart, which I'm showing right here. I use the range chart to see market structure, regardless of time, and then I'll use the 5-minute as well. I developed this indicator to help me see the movement of the market engine. All right, everybody. All right, let's look more closely at this. So I was talking about the market engine and market speed. Okay, so there's a couple of things to note here. The analogy is like your car, right? So you drive your car, you're going up a hill, and the engine works harder, but the speed will often go down as you go up the hill. So the engine works harder to keep the speed up. As you come down off the hill, then the engine will be working less, but the speed will often increase as well. The market acts a lot like this. There will be the engine that is pushing hard, as in the number of transactions that are taking place, the volume that's happening, the number of stocks that are working towards the up or towards the down tick. Right? Combination of things comprise the engine. The speed is the change in price, the impact on what people are trading at, the levels that they're trading at. So that's the speed. And understanding that the engine's working really hard. Now, in the market's case, it's a little different because it can be working hard to go up and the price isn't moving much, or it can be working hard to go down and the price isn't moving down. But the analogy still applies that the engine works at a different rate many times in the market. And when we catch that dissonance, when we catch that those are misaligned, it opens opportunities for us to trade. And there will be points where the engine makes some clear indications that it is going to be effective or not effective at moving price. So the market is all of us, it's the large institutions, it's individual traders. So we comprise the engine, and that engine then is a representation of what's on institution and people's minds. All right, so we're coming up to the market open here in just a few minutes. So I'd like to understand that difference. Now I talked about a couple different charts that I use, right? So I'll use the 1 minute, which is what I'm showing here. I'll use the 5 to show that as well. And I already talked about the 4-tick range chart, so I'll use that also. But one of the keys here is to also use something to help you visualize that relationship between what the engine is saying and what the speed is saying, and then to capture those opportunities and make profits. Actually, to make high probability profits. That's really what's of interest here, obviously. All right. Okay, I'm just reviewing stats of the day. Yesterday, traded yesterday. Okay, I should also make you aware of what I have on the charts. So when we trade, we're trading ourselves, right? We're trading our beliefs and our thoughts. And when you think about trading the ES, one of the things that I've learned is, obviously, if you think about the dome, right? And as you trade across the chart itself, the higher probability buy and sell opportunities are closer to the current price, right? So the current price, it's at, say, 2378.5. There's a higher probability that it will go down to 2378.25 or up to 2378.75. There's a much higher probability it'll hit one of those than, let's say, it goes all the way up to 2383, right? I mean, that's obvious. But knowing that, if we find good locations where the market engine and the speed are giving us the right notification, then we will trade higher contracts for the higher probability locations, and take the higher profits early on, and then leave a few contracts on for the longer term moves, right, which is further away on the down. Market's starting to roll off again, pushing down. This is not a market to buy in, obviously. I don't like to trade pre-market though, but I do want to understand what the impact has been overnight, because especially in days like this, market will try to make its big ranges in the pre-market. In other words, it'll often be an internal day when it does something like this. Not always. All right. Another little push down. This can come down. See here, let's take a look at the market structure. So overnight, it walked down on this channel, cut this channel, and then just tried to pop out of it here just in the last few minutes. Popped out, fell back, tried to come up again, dropped off again. All right, what we'd be looking for here is, as it comes down and kisses this area here, we would see some divergence in the market engine. Now this is pre-market, so I'm not going to get all the readings that I want. But that's normally what I'd look for is it came out of here, pushed. That's a great opportunity. It breaks out of the channel to push back down to the edge of the channel. And then look for how effective is the market engine. And lots of times it'll come down and make these lower hits right here. If it makes a lower hit, lots of times the engine isn't working as hard, but rather people start gobbling up, or institutions start gobbling up and buying for it to bounce back up. So I'm watching for that trade opportunity right here. It comes down, and I'd love if it would make a lower low right here. Don't know if I'll get that, but that's such a stronger signal when it does that. Maybe it'll do that at the open. The open's in about 3.5 minutes. Okay, so I should tell you about the moving averages that I've got. So I've got a few. The big white one across here is the 200 moving average. And then I use EMAs on the rest. So I've got the 8 is the green. Always trade on the side of where it is. In other words, got a bullish candle right there. Not going to buy it though, right? Because it's below the green. So green matters, right? Green's where the money is. Got the 21 is the magenta, the 34, which gives kind of an indication of the trend in general, is right there, and then the 89 EMA, which is close to the 50 simple moving average. Okay, so here we've got we're above. We have about a minute, not a little less, before the market opens. Okay, folks, 30 seconds. Let me get one more big push down. Let's see if that happens. Interested to see where it goes. Now, I love also to watch the advancers and decliners. So now that's tends to be a little bit of a lagging, but it can sure show you some. There you go, market open. Okay, it's starting to get our first reads of the day. Advancers and decliners are down to minus 1400. Obviously, a very negative. We are getting on the tick. Quite negative. Big old push right up here, super hard into that. Market really bounding up high, hard, and fast. Five-minute chart hitting the center of the Bollinger. Gonna pull back here for a little bit of retracement. I took a quick scalp on that. There's a quick, easy one. Market had overextended too much. Okay, we look at the market structure here. All right, so when we think about our structure, I love knowing the actual market structures. All right, so I've overlaid the market structure over top of my 1 minute. I'm watching the ticks and the market engine. I haven't really shown you too much of the market engine yet. It's still forming. It takes a little bit of time for it to form. It's going to show up right here if you can see where my mouse is. It's going to show up right there, and we'll start to see some dissonance here. Okay, so I've got a channel that came straight across here, and it's also hitting the 200. All right, now as it pushes up hard into this, this will be another key reference opportunity. Quick pause. Do the initial push. Still sitting at that that location. Making its way up to the center of the VWAP here. There we go. These two are just going to come up barely and kiss here. Let's see what that looks like. VWAP's at 82.93. All right, I just took a few more ticks out of the market. All right, now this is awesome trading opportunity now for a short. The reason why is when it comes up here, you notice that the I'm gonna start selling short right up here because I'm getting on the other side of the moving averages. So when it gets up here on the other side, so I'm gonna start laying these out. 84.62. Yeah, I needed to come up a little bit more here in order for the good opportunity to show up. Not yet. Not yet. Okay, here's what it is. All right, you notice that the moving averages are coming down across here. For whatever reason, some of those aren't showing up right there, but they're getting on the other side of the 200, right? So the market engine is telling us that it's super bearish at the beginning, but it's trying to become bullish. But it's become bullish too quickly, and so this actually provides opportunities here. So when it gets up here around the 2384 area, so I'm going to start laying out a few short opportunities because what I want to do is you'll find that the probabilities are that it'll get up on the other side of that, but it's also when you get all of the other moving averages on the other side of where the price is. In other words, price gets on the other side of the 200, but all the moving averages down there. Trade the opposite direction, right? That's a good contrary opportunity right there. Okay, let's see. It's not quite pushing up off of that. Let's see if it'll do that for us. It might just be stopping right there. Okay, I've already entered a short here. I took a short here. It's sitting at that location. Gone up, touched the VWAP there in the center. I'm still short. All right, see the market structure there. See if it pulls off just a few more ticks here and I'll take my profit. Still holding. There you go. All right. So I took another win there. So again, that trade's kind of an important trade. All right. So that trade, again, the message is this. All right, so you got the 200 moving average. You know the market structure. This is not based on time, but market structure. When price gets by itself on the other side of the 200 and all the other moving averages are on the other side, you have a higher probability of trading a contrary trade and pulling several key ticks out of the market at that point. All right. So that was a trade that I just took there. So I've had 3 trades so far. They've been successful. Okay, let me move the market structure out of the way there. Come back to our 1-minute chart. Let me introduce you to something. If I here we go. Market's pretty. Look at that. Overnight market started super low. What this means is that there's a lot of energy outside of let me say another. There's a lot of energy to the downside, right? So that's how the market opened, is way to the downside. That's not a surprise. We all watched that. All right, but it's trying to move itself up strongly into this. Now, it'll move down faster most of the times than it will move up. But as it's coming up, I'm also watching this market engine. The market engine here is an indicator I developed. It's basically averaging the range of movement of the upsells and the downsells of stocks on the market. All right, so it'll show divergence opportunities. So it's not the MACD, but and it's not the RSI either. It'll show the divergence opportunities. Also show, hey, price has been more effective or more responsive. It's pushed hard in this direction. Price went further faster in this direction than when it pushed in the other direction. So it helps me to see that. Say, oh, where's the market effectiveness? Where is it responding better to? Oh, it's responding better to the downside. Oh, it's responding better to the upside on a particular day. All right, so in this case here, let me trade this. All right, I still have some shorts that are laid out. I'm not in a position at the moment, but still an opportunity for perhaps one more sort of counter trade as we get here near the top of this Bollinger. We come across the center of this channel. Okay, just moving my positions. All right, now if you watch this right here, I'd like to see it do one more big push-up, and then we'll trade counter to that. Again, the trades for me have actually been more to the short side, even though the market's pushed up. The trades have been down. So I also use another view of the market engine, and I'd love to share more with you what that is. So there's another chart that I have up, and that chart gives sort of the net or the sum, and I'd be happy to go over and share that with you. But as I watch that, definitely it's to the downside. This means that the overall effectiveness of the market, while is initially trying to be positive, is showing some downward pressure still. And so that one is the net effect. It's what I often refer to as the real move, right? It's the one that keeps me on the. So there's a little more pressure to drop on the market, and here it goes, just as the real move just told me. Okay, gonna pull back here. I'm in the market. I'm short, and I don't try to go short, or I don't try to go long for too many ticks. Actually, I'll take 3 or 4, and I'll be happy with that, because I go, there you go, I'm in and back out of the market already. So I could see the market was going to drop, and my real move indicators told me that, so I took that trade opportunity. I'm not good with holding on for a long time, just because lots of times the E-minis are a narrow market, right? You get 2, 3, 4 ticks, or you get a couple points in one particular move, and I don't propose to know what the real long-term movement is. But so far this morning I've traded the structure, and I've used the market engine 2 times now to help me know what that's looking. This view of the market engine right here, notice it went high and then down and then down, all right? So it continued to push off, and so that gave me some indication that the market engine was in fact dropping, and it's so bearish right now. There's another view that I'm not sharing with you that I'd be happy to go over with you one-on-one. This is something that I do some teaching and training on, and it's highly effective, and it's the real reason why I entered the market and went short. Pull some of that in here. There you go. This is it right here. So I have my high probability indicators on here, but it's this this view right across the top here. This is the real market move. You notice that on the top right there, the price was really dropping down. That's because it's the net effect of the move of the market. All right, so it continues to be bearish. Okay, let's see. So the market structure came down. It's touching the 34, just sitting a little flat. The real market move is still showing a little bearish. It might rest here for just a little bit. Just moving some stops around in case it be nice to see it drop one more time down and touch this, coming near the bottom of this. Oh, okay, I just went short again and took another profit. That's my fourth trade. Took another 3 ticks out. Oh, there, now it's really dropping. Okay. Sometimes you wish you would have stayed in a little longer, but that's okay. At least I had the right read on the market, right? That's what matters. I'm in the right direction with the market. My market indicators are these high probability market, I call it the market engine and the market speed comparison. They're really effective, and I've been trading for 5 years, and I just found that that it's not a lagging indicator, right? There's plenty of other indicators out there, but I want to know right at this moment, how hard's the market working and how well is price responding to that, and in which direction? Is it being more effective to the upside, or is it being more effective to the downside? I'll give you a hint right here. Look at this. You see the range of movement from this price down here to up there. You see the market engine long ways, right? This, however, has covered from here to here. It's already come back about half of the distance, but if I really came down and showed you how deep it was, there you go. This may give you a little better clue. Okay, this is how hard the market engine was working. Hard. Look at that, boom, right? Came down and with much less effort went short. All right, see that? Now look how hard the engine's working, super hard. You see that? Really hard. Oh, and look at prices just barely moving up. Oh, lots of folks are really trying to buy it up. Bulls are not being as effective, right? Okay, bulls are not being quite as effective. What I'll do is I'll see if I can take advantage of that, right? And go to the short side, all right? Okay, so I did that, and I literally just took another trade right there and took a short, and I was in and out in a few seconds, and that's my 5th trade, another 3 ticks, and yeah, you see how it works? So the engine was working super hard, but price, you saw, just wasn't responding, okay? And so where the overall effectiveness is to the downside, and I briefly showed you that other chart, now what we've got here is you can combine those and see, hey, the trade in this case is going to continue to be to the downside, at least for the moment. Okay, 5 trades. Luckily, all of them are winners at the moment. Okay, look at that push. Look at that. It's pushing really hard. Price isn't quite responding yet. We're still below the green on here. I'm looking at my 5-minute chart. Now my 5-minute chart, if I bring that over to here, here's the 5-minute. So the 5-minute says actually I'm above the green. So it's saying this is looking more bullish, right? So it's above the green, which is critical. And look at the engine's working super hard. It's not even to the 0 line yet. That's how negative the morning's been. At least the opportunities have been for me to the downside, right? I've been more effective trading to the downside, even though price has gone up since the open. Does that make sense? So, okay, yeah, price went up at the open, but The easier, more predictable, easier money, I guess I should say, has been sell it at certain points and get quick fills, quick hits. Okay, so even though it's gone up a little bit. All right, so now here we are. It's sort of sitting. We're 20 minutes into the market. Now, lots of times what will happen is after those first 30 minutes, it'll shift right and go a different direction. This is a point now where I can see the buyers in the stocks are really pushing, right, they really want it to come up. It wasn't as reactive there. I sort of missed an opportunity here. When it closed down like that below the green, that was another opportunity for me to take it on the 1 minute. But I'm seeing that it's starting to rest here. So I'm interested more in just the high probability, safer trades, so I don't feel the need to push it. So that one would have been a little tighter. If it, on the 5 minute chart here, if it comes and rests now below the 5 here, below the green, then they'll tell me, okay, it's ineffective at getting up any further. It's coming back below the halfway through the Bollinger. And yeah, here we go. Here's some more trade opportunities coming up. I keep talking and missing the trade opportunity, but there you go. There's your trade opportunity right there. I was a little slow on that one. All right, came back down here to the one VWAP there. All right, moving some entry points around here. So I found these useful on these VWAPs. These are great target sort of locations, is what my experience has been with that. So I tend to like to use those just in terms of a reference point. I don't necessarily trade off them, but to know, hey, we just hit the VWAP, one standard deviation out. Yep, okay. Like up here, right? Hit the center of the VWAP, chomped around for a little bit. And then certainly turned around and came the other direction. Market keeps trying to push up, but failing. I've entered short. Let's see if I get another hit here. Boom. All right, I'm already back out. So it took another few ticks. That's my 6th trade, profitable. And I'm about hitting base hits, not home runs. High probability base hits, right? Then that's the money you take home. Awesome trading morning, Some don't like the chop. This is actually very highly profitable when there's some chop like this. So if you know how to read the chop, right? So use the market engine and market speed, okay? So what is the market engine telling us? It's telling us that it worked really hard to come up high. Now watch this. It worked kind of hard and came up quite high, relatively speaking. Now it worked really hard, but only came up lower. What does that tell you? What's the news? What's it saying? It's saying bulls just cannot get the market to go up at the moment, right? The trade is definitely to the downside. Where was the market open? The market opened, where are we? 6:30 market opened right here. We're back to the open. Now normally I've set the open lines, so I use those. I've been talking so much here this morning that I haven't stopped to do that. Okay. I think that what I'll do is I'm going to stop my session here for this morning. Hopefully this was helpful for you to see how to trade it and how to use some elements of the market speed, which is the price and the change price, and the market engine in terms of the effectiveness of the engine in terms of moving price and how I was able to use that. I did 6 trades, anywhere from 2 to 3 or 4 ticks, so ending with a profit. And yeah, that's in the first 25 minutes or so. It's not always like that, right? Some days are more effective than others and get better reads than others. This was a highly predictable morning. Okay, thanks everyone for joining me, and hopefully I will see you next time.